Good morning, viewers. Welcome to Frankly Speaking with Vibhuti Jha. Today we are going to talk about a subject matter which must interest majority of NRIs watching this program today. We often talk about political issues, impeachment, India elections, CAA, and what have you. The Hindu-Muslim dimensions. We talk about varieties of political matters because they remain in the forefront of all discussions, given the politicians control the narrative. However, if you remember this very clearly, it's the economy is stupid. That was a famous statement made by Bill Clinton in his 1992 campaign. So it is the economy is stupid, remember that. And the economy is made up of people like you and I. Small businesses, medium-sized businesses, large businesses. That's the element that plays into the real role of the economic development that politicians bank upon through their decision making. Now, as we know currently, United States is one of the most economically dynamic country doing well, while the rest of the world is in a kind of a slowdown. It's not a kind of slowdown, it is an actual slowdown. With the coronavirus epidemic going on, Chinese economy is likely to slow down by 1%. So imagine $1 trillion economy shaving off by 1%, and their oil requirements going down by 20% is going to have a significant impact and cascading effect on life, in the economic life of everyone. Stock markets, you name it. And one of the things Mr. Trump has talked about most is that how the economic life of businesses has grown in America, how people are happy about their 401k. And that's the issue that we are going to talk about more, because 90% of the US economy is in private sector, majority of it in middle and small sectors. So today we are going to focus on NRIs, what matters to the non-resident Indians who are into technology and who have prospered in business, whose significant wealth, personal and business, are kind of commingled, because the businesses, personal wealth goes into business, business wealth gets appropriated as personal. And to discuss that, we have today, I have great pleasure in welcoming a dear friend, Nainesh Shah. Nainesh is a CFA, as he is a Gujarati too. So who else better to talk about money matters than a Gujarati who is a CFA? He has a checkered record with corporate America. He's an engineer and a CFA. And in the process, he has come up with very significant thought processes. He co-founded a company after working in corporate world. It's called
Complete Advisors.
Complete Advisors. Now, Complete Advisors, as the name suggests, is for businesses and personal financial planning. The whole idea here is it not a run-of-the-mill enterprise? He's trying to make a distinction as to how the businesses must face the growth or the slowdown. What must go into business continuity, succession planning. So these are the issues we are going to talk about today. So Nainesh, share with the audience your profile, how and what was it that triggered to set up your own company, Complete Advisors, in which you are trying to particularly target NRI businesses who are into technology or technology-driven businesses to make a quadruple increase in their life and savings.
Thank you, Vibhuti. Thank you for having me here today. Main reason to start something of interest in terms of helping NRIs business owner was my observation that there are a lot of missing element that business owners were kind of not understanding. One of the biggest element is the business itself is about 50 to 80% of their wealth. And then you have remaining 30 to 50% on a side, which is could be real estate or equities or something else. But if you don't manage your business valuation properly, and if you don't manage your valuation of business enhancement properly, and then eventually, because everybody is going to exit a business, either you do it with force or you do it without force. Everybody's going to exit. Now figure it out how to exit in the best way. Those were my initial thoughts, and that's why I started a company.
And you have brought about a very interesting topic, something which is very close to my heart, because as a private banker, when you advise a client, you don't advise a client with reference to one decision.
Correct.
You advise the client in its totality of his reference, right? So there is business. But one of the biggest things that happened as a banker I know, one lot of businesses got into trouble because they were not smart enough to recognize that working capital was not meant for long-term acquisition in the company. Likewise, long-term money was not meant for working capital purposes. Now, the market is all full of information. There are so many dichotomies in the market. People say, buy low, sell high. But majority of the people actually buy high, sell low.
I have seen that.
You have seen that. We all see that because it has happened. I don't know whether it's happened to you or not, but it happened to me when a broker called up that XYZ stock has gone up 25%. This is the right time to buy. And my question to him was very simple. Where were you when it was going up from 0 to 25? Because I have already missed the march of 25% up to my. So tell the audience that let's talk about it, because we are both belong to the same field.
Sure.
So let's kind of make a synthesis of our own experiences about how we can help small and middle businesses, NRIs particularly, you talk about, in a system where you have unfettered freedom to do what you want to do within the frame of law. So what is it that is available to people in your scheme of things that people can benefit? So there is a thing called succession planning,
Sure.
making an exit.
Sure.
So making an exit is a very dramatic challenge for a business, because majority of us, we don't want to sell. We do not know when to exit. And that's a very important point. So share some thoughts on that.
I think about a business owner, NRI or otherwise. The challenge that they face is if they want to take a 2-week vacation and let the business run on its own and not call in, I would wonder how many more business owners can do that. Now, what you have to do is to try to get your business to the point where it's not dependent on you. And that is the beauty. And then you can run the business, you can have more of the business, you can have less of business, but you can also do other things that you might not have been able to do. And this is sometimes, I think, in terms of running on a treadmill. If you're running on a treadmill, that's the business. And I have seen example after example after example of people making money, but they can't get out. And that's the mindset that we need to think about, is how to understand the business dynamics, and it can be multiple part of the business. So you think about planning, process, people, marketing, legal. All of that needs to be dialed up or dialed down or tweaked to make it run smoothly.
One of the things that happens in exit options, and that's very important, because every business has a life cycle. We know by historical evidence that most of the businesses face a downturn past the 3rd generation.
Sure.
Or the decline begins from the 3rd generation. Majority of Indians, and as we know now, the transition has happened from 1st to 2nd generation.
Mm-hmm.
What must happen in terms of the exit sale of business to capitalize on the max potential, or intergenerational transfer of businesses? Because many a times, many children are not interested in continuing the family business. So how does one make a selection that out of my 2 sons, one is not interested in my business? How do you determine who gets what? How does the family dynamics play a role? I can go and give a talk on this subject for an hour.
Let's have a conversation on this. I think this is a very interesting topic.
Yeah.
And I think this is a challenge, and it's just a challenge specifically for NRI. Kids who have grown up here, they have their own view of world. They are culturally slightly exposed to Indian culture, and then they are significantly exposed to non-Indian culture. They have their vision. They might, your father might be a business owner, but kid might want to be engineer, IT, doctor. Now, question is, how do you decide when to bring the kids in, or second generation in? Sometimes you don't have an option. Sometimes the second generation decides that for you. Sometimes kids go to business school, they do their MBA, they get corporate experience, and then they come back. So you have to be patient. As business owner, you have to be really patient and let them decide how to turn into your business. I just give you an example from yesterday. I met a gentleman, a really, really nice service business, 150 people working. Both kids don't want to work for the business. So that's a challenge. What have you seen in your exposure?
It is a whole lot depends on the family dynamics. Okay, so like you said about both children are not interested. I know of several families. The one example that comes straight to mind is the son has gone to one of the Ivy League colleges, comes back, doesn't want to work for the family.
Exactly.
Goes and joins a major investment bank company where he's paid $100,000 for being whatever he was, an analyst, and spends 12 hours working. And then father says one day, hey, you are spending 12 hours. Is that what I taught you for? Right? Why don't you join the family business, which is X size? Use your intellect and knowledge to grow this business.
Yeah.
And I will pay you $100,000 for that. So the son joined the family and the business began to grow because the son was now treating it as his own business. He had a sense of ownership because the father was smart in telling him, do as I take advantage of my experience, don't have to follow my beaten path.
Right.
So that's where it is the family dynamics becomes important. How the relationships is between the father, son, daughter, or whoever is in the line.
Yeah, and you know, Vibhuti, if you think about, it's not really bad getting a corporate experience. Now you are exposed to other ideas, other systems, other processes, and suddenly you can take a little bit that's useful and bring it into your family business. So I'm not against having somebody go out, work for a few years, and then come back.
Right. Yeah. I mean, it's as the saying goes, you learn from other people's mistakes.
Exactly.
Apply that. But the more serious part of this is the growth story of a family business. Normally, the Indian mindset, barring a few here and there, they're very easily contented with what we have. And the growth story is the one which I have confronted most. And one of the examples was when somebody running a business told me, look, I'm very happy with what size business I have. My children are doing well. They have a Mercedes, Lexus, I have BMW, whatever. God has given me everything. I don't need to grow more. And that's the time when I stepped in by saying, yeah, you use the word God has given you everything, right? Totally agree. I'm not here to contest that point of view. But let me ask you a question, and that's the question I asked. Did God tell you to stop growing?
I think it's such a interesting way of putting it. Either you're growing or you're shrinking.
You're shrinking, yeah.
Either you're shrinking in your business or you're shrinking in your mindset.
Right.
And I think as a race, as a human race, growth is inbuilt. If we are not growing as a race, I think we have a bigger trouble.
No,
we can talk about something.
Yeah, you are totally. And there is a fallout of that conversation. Because that's the time when I said to him that you are, say for example, $100 million business.
Yeah.
You have done it for 7 years. If you don't want to grow, as this famous story in Alice in Wonderland, that in today's world where technology drives every decision making, if you have to be running at the same spot to remain stationary.
Yeah.
Kind of.
Yeah.
So if you are not growing, somebody is coming in your business, he will scale up and you will be gone. So the question is, if you do not grow, be ready to die. And if you are not willing to die, then you are going to be very unhappy about it. So think about it from that perspective. And the key question which I asked was that you took all the risk investments to be where you are. So if to grow from 100 to 300, how much time will it take considering what you know about your business? How much risk will you take to do that? And he said, not much.
Exactly.
All that he had to change was the way he was operating the business. Let's do one thing. Let's dwell upon the growth and the exit options more when we come back after this short break. Stay tuned. Welcome back. We were having a very interesting conversation between how to grow the family business or how to exit from the family business. Here it is important also to understand the dynamics of family, because most of us are nuclear families here. There is no several uncle, cousins running the business, but there are children in it. Children proclivity may be different from whatever parents are doing. I know personally the story of one family where there was one son. He was just not interested in the family business. He wanted to sell pipes and tubes in addition, instead of being in the service industry that his father was. And they made a transition because father recognized that he alone cannot do it, because after all, everything belongs to him.
Sure.
Right? So these are the stories of growth and exit, but there are more than one. Then there is an issue of how do you stay the plan? How do you design the strategy? How do you design the exit options respectfully? Because most of the families get into a battle royal. Soon as the grand man has passed away, then the battle begins and that leads to demise of the business. So share some of the experience, because in the wealth advisory function, for the client, performance alone matters.
Yes.
Whether the investments are,
Whether you like it or not.
whether you like it or not,
Right.
performance alone matters. And given the fact that the market is what it is, the competition is what it is, the way technology is driving, how do you keep track of monitoring the client portfolio of investments or the business to make sure that the market dynamics of stock market going 300 points up, 300 points down, as the saying goes, market will do what it does. What is important is how are you doing in the market?
Correct. The critical point, and this has been the study, research, the behavioral aspect of investing is probably the most critical and least understood and least applied. So from my perspective, it's a job of an advisor to train the client over time to understand the dynamics of market, what are the risks involved, and how to manage risk over time. And that applies to the business also. So in terms of business, if you are planning to exit, it's not the last moment that you decide about exiting and you just call a business broker. What you do is you plan 3, 4, 5 years ahead. Similarly, if you're on the other investment side, you have to understand that market is going to go up and market is going to go down. How you react is critical, and that's the behavioral part, which is absolutely critical for us to teach client.
Now, the behavioral part is my favorite thing, because the psychology of investment, psychology of business, that plays a key role. Otherwise, we would be doing the same thing. Because as individual, we are all different.
Right.
As family, we are all different. I like this tie, you may not like this tie, but doesn't make this tie bad. This is a very nuclear, simple example to understand the psychology of investment, psychology of doing business. Why does somebody choose IT? Why somebody choose hotel? Because that's what you think is more suited for you. So understanding the psychology is important, and that's what you said the advisor's bigger role comes in. So how would you, let me put it this way to you, define the suitability of an investment to a client? What are the parameters on which you as a complete advisor determine whether X investment is good for him or Y is better for him? But that decision making, because there is a challenge in the Indian mindset. An Indian is hardly willing to listen to your advice. We Indians have, and I say collectively ourselves, आप हमें क्या सिखाएंगे, हमें तो सब मालूम है. It's a classic failure of which arrests the growth of an Indian business. हमें सब आता है. And most of the advisory thing that we do are routine matters. It's like you go to a doctor for a complaint, and all that he does after half an hour examination recommends you a Tylenol. You could have said, I would have had it by myself. I didn't need to come to you. But configuring the challenge is the advisor's role. How do you address that challenge?
This is such a relevant question, Vibhuti. It's. Let me give it a thought, and I'll let. In terms of Indians trying to take advice, and you are right, it's challenging for us to take advice because we think we know a lot. We are not trained to hire outside experts to listen to them. When I talk to clients, my job is to understand their mindset for short term and for long term, trying to understand where they. I had read a book long time ago, and I would recommend this book to almost anyone. It's called Barbarians at the Gate. And the book really talks about how to think about money. And when you think about client and training them, the first question that comes to mind is, what do you want your money to do for you? And once you start training your client in that mindset, then it becomes much easier to put into right investments, to find the right investments, and then not panic when market is changing. And my goal would be, if someone becomes my client, my goal would be, if market goes down 30%, they don't call me. That's my goal.
They don't call you, but that's a very important part. They don't call you. But if the market does, if your portfolio does go down by 30%, you will be worried like hell. And they might just call you to say, hey, what happened? Now, the important part here is that you are absolutely right. And belonging to the same field, being in the advisory business for a long number of years with ultra high net worth people, there was one thing that we did very clearly, and that was determine the purpose. Things you like, you don't like. The majority of the time, most of the business owners are too busy. Either the market is doing too well, that means they're busy making money,
Sure.
and they don't want to be part of, I don't need to do anything now, let me make money.
Right.
Or the market is doing badly, your business is doing badly, then you are so worried, let me take care of my business before I do anything. But as the saying goes, you got to be in a perpetual state of review of your business. Because today we are living in a remarkably alert, agile, fast, technology-driven world where things happen in a nanosecond. It's a virtually, dynamic marketplace.
It's unreal.
Unreal marketplace. That is generally we are not used to. But the market, think about it. If you look at the analytical model that is coming out now, data analytics, the big data, it completely transforms a business practice. How does a client attend to that challenge of speed? Because generally, I'm only as good as my speed is. So what I could do when I was 40, I can't do when I'm 60. Likewise, it happens in business.
Look,
how does one adjust to
Vibhuti,
that?
my passion is technology. And as you mentioned, we live in a new world. Last 10, 20 years, last 15 years, things have changed so much that if someone who grew up or who grew up in early 30s or 50s or 60s, they wouldn't recognize this world. And from my perspective, every business, doesn't matter what type of business it is, manufacturing, services, production, restaurant, whatever it is, has to understand the technological change that's been around us and implement some of those changes to improve their business. So Silicon Valley is a great place. It's dynamic. We are a bit remote from that. And I would say keep attention to what's going on in terms of the innovation coming out of technology industry and IT industry and make a change. I'll give you a simple example. If you are a service company and you don't have a customer relationship management software, CRM, you are missing out on a lot of information. Now, it's an easy implementation. It takes a little bit of time to get used to it, but once you implement it, your valuation of your business goes up. And you can increase your revenue, you can do other things. And I think technology is a critical factor for business improvement.
Now that's a very, very valid point, because the valuation goes up only when you are fine-tuned with the market and what you are doing in terms of technology adaptation.
Correct.
What happens in reality though is a lot of people get sidetracked by technology. whether it is CRM, ERP, HCM, whatever tools they employ of technology, they think that we are losing control. That's a fear. Remember one thing, market business is not only easy sailing, because you can do something and then what if the thing goes out of control? That's the fear most of the single proprietary ownership has.
And which is not unfounded.
Not unfounded.
Yeah, I agree.
The question here is, how do you handhold the client to implement certain technological processes that improves the valuation? So education becomes the key part, right?
Absolutely.
And the suitability of the technology for that business is not buying a software to make something. We know enough examples of people having adapted a software, it didn't work.
Right. Even
right?
public companies have that
Even a
challenge.
public company. You were earlier talking about Amazon or something. What were you that you were trying to say about that?
I think it was in reference to the change.
Mm-hmm.
We all know that retail market has transformed mainly because of Amazon and Amazon effect. Walmart is probably one of the few companies which have tried to stay up to date. They bought a lot of technology companies. They tried to implement a lot of technological changes. And I don't know if they are there yet, but a large company like Walmart can make a change to face Amazon type of competition, then smaller companies should think about that too. That's what I was trying to kind of convey.
Okay. No, because what is happening right now in the economy is that because of the technology, everybody is talking about technology. It's become very dynamic. So you have to change your business modeling. You have to do modeling. You have to do data analytical. You have to make sure that not all your investments are in one place. A lot of business people make the mistake of not siphoning off or allocating their portfolio out of their core businesses. That's one of the biggest challenge people feel, that I am making 100% out of my own business. Why should I put my money 10 or 15 or 20%?
Which in a sense, it might not be incorrect because some of these business owners, when they start, they do well, and they think that's the path. And I have a saying, if you want to grow, you concentrate. So if you are working in a business, you concentrate on that business and you try to grow that business. If you are working in some large technology company, you try to focus on that and you focus on technology. But when you want to when you want to protect your asset, you need to diversify. And that's where, if your business is grown, now you want to protect that asset. How do you diversify? Do you diversify outside of business? Do you buy other investment, other public companies, or fixed income securities, or real estate? So diversification is your best buddy to protect your asset.
Diversification, and that's what becomes important in terms of taking advantage of technology to support you, because you have so many tools available, virtually free. So take advantage of your advisor to make sure and determine which one is good for you, because technology is a tool. It's not a shot that will change your structure, but it can change your structure if you are using it well. So the point of the matter remains is that you have to collaborate. In this modern era, collaboration is the name of the game. The era of being in one particular city and doing something is over. You can be sitting here in India in Kadapa and Kudalur and selling your product in California.
Another way around too, yeah.
Vice versa.
Yeah.
So technology has opened the whole universe. Particularly, you did not know what you could do. You can access everything else. So collaboration is the tool. One of the key things that happens in most of the family-owned businesses is the retention of talent.
That's a challenge.
Particularly in a market like the United States, where people, the low levels of unemployment, employees are commanding the shots right now. So somebody is giving. So what must people do for employee retention? We'll talk about this right after this short break. Welcome back. We were talking about employee retention, because every business, for example, Nainesh talked about dealing with talking to a family owner business who had 150 employees. Now, knowing United States the way it is, people are mobile. People migrate from one place to another for better opportunities. So one of the things that happens in a small business scenario is that people do not stay long in a mom and pop shop or a small business. They are always looking for growth. And it is the small businesses that eventually grow bigger. So today's $5 million company could be tomorrow's $50 million or a $5 billion company. The economic panorama is full of stories like that. Now, an employee is a critical element of any business, whether it's in a gas station or anywhere. It takes time to train somebody.
Sure.
So part of your complete advisor is part of it. Do you have any plan that offers people employee retention options? Because that's a very expensive asset to replace.
You're so right, Vibhuti. And the other thing about employees, younger employees have a different way of thinking about work compared to older employees. I think if an employer or owner of a small to mid-sized business thinks from the perspective of employee and what would make them stay. So one of the things that I think about is other benefits. What are the other benefits I can offer? Not for typical very small gas station, but if you have a 5, 10, 15 employee and plus, why not offer something for their long-term retirement, 401k or something similar? Why not think about how to educate them for a change that's coming for future? These are some of the ideas that the owner should be thinking about, and we can help in making those like solidify. And that's how I think one should start thinking about how to retain employee. This is a challenging environment, as you know, not just as we were talking about earlier, not just gas owners, gas stations employees is not hard to find, but even large company IT employees are hard to find, and that remains the challenge for our time. And that's the challenge because of the changing economy. We are in the economy. As you started the segment, the interview, economy is doing really well. What are the challenges that comes with that?
Talking about the economy doing well, it is also important to know that in the economy, one of the yardsticks is the stock market, and everybody has interest, watches, whether you are in the market or not, everybody watches the stock market going up and down. And people talk about this as a, I'm sorry. So it is important to talk about the fact that how is the market doing? The current president has been really talking big. Markets have gone recording really record levels of performances. And as the saying goes, whatever goes up has to come down. In your wisdom here, nobody has the crystal ball, so I'm not putting you on the spot.
Thank you.
But what I want to ask is, from the layman's perspective, how do you visualize? Is this the time to scale back your investments? What advice would you give your client today?
2009 March was the bottom of the market. And my gray hair and your gray hair,
no, I have no hair left anymore.
We have seen ups and downs, how
Right.
things change. I've seen a significant decline. I've studied a lot of declines of the histories, but I personally have seen significant decline in the market in 2000, when tech boom turned into tech bust, a significant decline in 2007 because of the real estate market going down, and then small declines here and there. This has been the current market has been probably one of the longest bull market that we have seen. And as you touched on, something that goes up, should it come down? Usually there is ups and downs that kind of is natural to markets. My advice to potential client or people who I talk to or people who I deal with and other people is, what do you want to do with your money? If you don't need your money for next 30 years, it's a different reaction. If you need your money next year, it's a different reaction. And that should be the driver of what you want to do with the market. Market should not drive you. You should be deciding based on what you need from your money. And I think that is how simple I think about this, even though I have significant experience in managing different type of portfolios. But for an individual, it's as simple as that. What do you want to do with your money and how much time do you have? And that will tell you what you need to do with the current market.
And that is a very important point, because I believe in it, because you have to drive your business, your investments, your allocation of assets with a purpose. Because if you define the purpose of, I need this money to spend money for a wedding in the family, I want to spend the money for education, every money has to be driven with a purpose. The moment you attach a purpose to an investment, it begins to work better, because then the life cycle of the investment becomes important. So if say for example, if my son or daughter is only 10 years of age, I know they don't need money until they go to college for their.
Correct.
There is a play for 6 years there.
Right.
And that's an unavoidable expense to be having. Especially if you are doing well, you don't have access to grants and loans. Other than loans, you don't have access to scholarships and grants. It's a burden. And that's where it is important to drive your investments, your business with a purpose. I'm going to do this at age 65. My ability to do what I did when I was 35 is going to be different.
Yes.
And that's where the role of the advisors come in. But here is a big challenge, because I worked in a large company, so I had a different kind of a challenge there. But why must somebody do business with you is a key question that advisor looks at. Because there are so many advisors in the marketplace, from the biggest of banks to smallest of firms, right? And smallest of firms are made up or established by people who worked in those big companies. So they branch out to start their own with a little book of business or whatever. So why should any client trust? This is a key word. Trust you, since you have walked out from a big corporation to start your own business. What is the distinguishing feature for you to say? After you have said, I'll tell you my conversation.
It's again, trust is, you cannot ask for trust. You have to earn your trust. And trust doesn't happen instantaneously. Trust happens over time. And that's the core of which a lot of advisors kind of miss. You, Mr. Unknown, why would you trust me? If I take care of client day to day for months and for years, over time, I have a right to expect increase of trust, but I have to earn it. So that's why if somebody has $5 million, they're not going to give me $5 million to manage on day one. They'll say, okay, I'll give you 100,000 to manage, 200,000 manage, 500,000, and then you build from there. You have to walk the journey with the client to the point where it becomes personal, because in the end, everything is personal. You want to come to the point where client trusts you intimately, well, not only their business decision, but their personal decision.
And trust is a word which is the most widely abused.
I agree.
In any relationship. It's a word that can hypnotize the unsuspecting, or it can really inspire a relationship. This is important. Trust is a function of performance. Remember that. It's remarkably important. It does take time to earn the trust, but it can't be so long. If you are not given the chance to perform, you can't have trust. So how do you establish the relationship to earn the trust? Because how much time do you need?
That's where you kind of show your credential in the beginning. what's your background, how much work you have done, what type of client you have. You go to doctor's office and you'll see a certificate of where they graduated from that tries to build a level of impression, and that's where you start. But in the end, trust factor itself is, you earn over time.
Yes, I totally agree with that. My thing is about how do you establish trust. You talked about very rightly your credentials, your education, but in the financial services industry, everybody has to have, it is a regulated industry. You have to have the CFA. If you are not a CFA, you have a definite amount of respect in the
just because of that,
investment
right,
world,
yeah.
that not everybody passes CFA. So
Sure.
you definitely are extremely good at numbers and your mind is sharp to put the correlation of numbers
Sure.
to be able to qualify for that. I totally understand that. So as a CFA, as an institution that you have worked, but here is a challenge, Nainesh. As the biggest of funds and every hedge fund says, past performance is not a guarantee for future outcomes.
Which is a true thing.
So the question
I've
is,
experienced that.
Yeah. So the question here is, what is it that you have to do to inspire trust in a client? What are those psychological moments? Because you are not trying to hoodwink somebody, because you can only go as far if you cheat somebody. Because your currency is, your reputation is your currency. So if your reputation is X, it doesn't take too long for people to figure that out. So nowadays, it's something which I learned in my private banking days, is that never ever assume that the person you are doing business with is stupid. Most of the financial advisors, they think they can swing an investment portfolio, and that's the risk, because you lose trust once, it's done.
Exactly.
You're
I
done.
think the challenge is sometimes people with our background, they talk over client, meaning they are trying to prove that they are smarter or better than client, and client doesn't know anything. And you pointed out correctly, client is smart from a different perspective. They might not know what is balance sheet or what's certain type of ETFs or certain type of hedge fund, but they know their world, and you cannot talk over them. I use this, with my co-founder example about, say there are 3 eggs. One has gold coin in it, one has silver coin in it, one has copper coin in it. From outside, you don't know the difference. And that's exactly what happens with advisor. You have a great advisor on one side and you have a not so great advisor on the other side. How does the client differentiate? And it's just how you come across, how you talk, how you respect. Sometimes you do more just before the prospect becomes client. You do go out of your way. And one thing that I learned or saw article a few years ago, reality is nothing happens. Take it from a simple, date or a large relationship. Nothing happens without 5 meetings. So you try to connect with people over a few meetings and then see what result comes out. And if you are really good, then business will turn up.
Very interesting. You talked about having 5 meetings. People die to have 1 meeting. So the question here for advisor is, what must you say in your first meeting that can lead to the second meeting? Because no client is ever going to write a check for you because you look good.
Exactly.
They will talk about performance. Now, let's talk about something which is more generic in terms of the fact that market is doing really phenomenal. Politics affects the market.
Sure
Whether
does.
Trump is to be impeached or coronavirus happens, there are tremendous amount of uncertainties in the marketplace. But there comes a point in time in managing your business or managing your investments or your personal portfolio. What is it that the people must do that covers the base? That is important. This is what is important, that before you fly, you need to know where you are standing. And that's important for the clients to understand. And that Q&A is the one which is essential for a dialogue with the client to determine the purpose, the focus, and what does he want.
Yeah, it's client has to come to terms with where they stand, as you mentioned. So you need to have a map of your current position. Then you take that, then you layer all the future needs and wants that you have, and then you come with a future map and question, and that's where someone with a finance background comes in, is can you get there? If you can get there, what type of risk, if you can't get there, what type of risk do you need to take? And if you need to take a higher risk, then you take a higher risk. If you don't need to take a higher risk, you don't take a higher risk. Again, personality comes into picture. Some people are, by nature, they are a risk taker. Some people are not risk taker. But that's where the knowledge of a financial person, the understanding, the history, that all kind of comes into play.
That's important, very important. Again, going back to another topic
Sure.
from here is the fact that, the world is full of advisors. Everybody's credentialed, good level of education, everybody's dressed well, talks the same language. It's a highly regulated market. How does a client figure out, apart from credentials and everything else, what is it that connects one advisor with a potential client? Share, if you have any one example. We have 2 minutes to close.
It's always about a problem. What is the problem that client has now? And can the person on the other side of the table help? If that's a starting point, and if you can help, that starts to build the relationship. I'll give you a simple example. Someone I know has a significant exposure to single technology company, and that's a problem. They understand that problem. Once they understand the problem, then you try to help with that, and then you move on. And that's just a small way to turn somebody into a client, helping with the problem.
You stole my words, actually, because one of my biggest experiences, which a breakthrough of a kind, where it was believed that there will be nothing happening in that relationship, one question from me changed the entire dynamic of relationship, in which I just asked the CEO of the company, is there any particular problem that you are having today that you want to be solved and you have not been able to solve? The moment I said this, he came up with a problem. And believe it or not, I had a solution for that. The moment I solved his problem, he said, oh my God, how come I never thought about it? And I said, because you are not me. So the question is, how do we relate? He laughed about it when I said, because you are not me, because you are so deeply enmeshed in the business that you have no time to look things from the sideline.
Yeah, this is like an inside view,
right,
and outside view.
Outside view. So I'm looking at it from outside.
Yeah.
You are playing the game. You are not knowing that somebody is coming to trip you.
Sure.
I'm the one who is shouting, watch for the trip.
Yeah.
That's what happens. Friends, this is a remarkable conversation. It's about business, about personal planning. We are all in this country to make money. Nobody came to America to stay poor. If that was the case, we would have stayed wherever we came from. So the question is, how do we make that entire transition happen, given the challenge that technology offers? Because there was a time in 1991 when I came here, we used to make a call to India, it used to cost $3.50 a minute. Today you have video conferences free. Think about it. The world has changed. You have to have the ability to adapt to the change. And adapting to the change is the most difficult thing to do, because we are made the way we are. So therefore, it is important to have a mindset which is open, receptive to ideas. Listen to ideas, find what suits you, and be open about your conversations. With these words, as I always say, every good conversation has to come to an end. So does this one. Nainesh, thank you very much for coming today.
Thank you, Vibhuti, for inviting me.
And I'm glad you shared lots of thoughts about it, and we talked about all of it. So see you again.
Hopefully, yes.
And hey, have a great weekend. I'm sure you all had a wonderful Valentine's Day. Take care.